You can see my screen. Is it up there, David?
It's loading now. Okay, now I see it.
Okay, great. Right here, you're seeing. I'm short a few Japanese yens, which is this chart right here. I just want to let everybody. First of all, thank you for being here and spending some time with first Valerie, now me, and whoever you'll be spending time with. It's a great group of people, of which David always puts together. I wanted to. My focus has primarily. I'm going to shut myself off because at least my video. My focus is for the last year literally has been on helping traders to pass the qualifying exercises that the prop traders. I want to get traders funded so that they can start actually putting dollars in their pocket. There are different ways to approach the market when you're trading for prop traders because of their rules and so on. And I'm going to comment on that a little bit as we go through. But the first thing I want to do is right here. When you see a PA here, this is you don't see all my account. I shorten this field here, but this is actually money that I'm earning. This is a funded account. I'm going to take that profit right now because I don't like. And I always go to the market. Okay, so this is a short position. Let's buy 3. Okay, and you can see that profit right here. This is the first trade I made here. This is another funded account here, which was a losing trade. This was right here. This PA account was it's a $50,000 account. I don't like to take. This was actually 2 losing trades. I don't like to take large losses in the smaller funded account. This one is larger. This one is a $150,000 account, and it took a nice. That's my first trade here. It took a nice $700, almost $700 profit. And this one right here is something that I'm in the middle of qualifying for. It's a $250,000 account where I can take on bigger positions. And this one I had a really nice win. So I want to show you kind of what I do, how I do it, and maybe excite you, especially if you are a trader who is trading less than, say, $50,000. I think less than $50,000, you really should be considering. Everybody should be. The crazy part is I always say that it's $50,000 is under 50,000, the smaller accounts, but it's the larger accounts that seem to also be gravitating toward prop trading. And if you can trade, if you're good at this, why risk your own money? Why not risk their money and get 90% of the profit? In fact, that $680, whatever it is I just took, that's all mine. It's 100%. Apex, for instance, not everybody does this, but Apex is the one that I've decided to use after comparing a number of them. Although I've passed in another firm, but I'm trading now primarily through Apex. And that money, I get actually 100% of my first 25,000. I'm not quite there yet. So all of that 600, not even 90%, but 100% was in my pocket. And I want to show you how to do that. I don't want to overexcite you because it can be exciting. Don't get overexcited like me, because really the key to trading, prop trading, is under trading, thinking big but trading small. And I'm going to comment on that as we go along. But this exercise today with everybody here is really about looking at charts and telling you what my feelings are from my experience. I will say that if you go to their money, yourprofit.com, you'll see the exact system that I use as I demonstrate some of this today. And you can purchase that I put up a special pricing for you. It's their money, yourprofit.com. So let's get into it. I want to look at the chat. Valerie's much better at the chat than I am. So now, thank you, David. All right, let's take a look. I focus on the futures market. So if you've got a futures chart you'd like to look at, I can show you why I made how I made this $600 in the Japanese yen and what I did and where I see the Japanese yen going. But first, let me take any charts that you'd like me to take a look at in the futures market. Always the NASDAQ first. Okay. Oh, before I get into the NASDAQ, look at my charts. is there anything that you notice about it? Is there anything that you notice about it? And I really like Valerie's charts too, because they had the same great feature, I think. But what do you notice about my charts? Anyone to kind of throw it in the chat? Anybody notice anything about the charts except for they're pretty? Yeah, the simple. Yeah, I don't have a lot of lines on my charts, and I think that there's so many redundancies and so many good individual indicators. And if you stick to the basics, you're going to do much better. So Valerie's talking about head and shoulders tops in a couple of last examples. This is the kind of thing, proven formations, and you're ready to go. Let's I'm looking at several charts when here's all my accounts. Two that are money in my pocket that I've already passed, and two that I'm now working on qualifying for. And there's actually a software that you can use to put, with one stroke, put the same position in different quantities if you want in the different accounts. I'm not using that yet, although I do own it. I haven't gotten around to making it happen. But you can see that these are the two main charts that I look at. This is the S&P, and this is the euro dollar. I found the euro dollar and the Japanese yen here are great to trade with. So you got the euro dollar, the Japanese yen. I look at gold, and I have silver and bonds here, and the gold, and then I have crude oil and some of the grains here in that same feature, and copper, which is another great market to be trading. So this is what I look at. I'm looking for my setup to happen. I'm looking for this to happen right here. Here's one of my setups right here. I'm looking for this to happen, and we'll get into it when you start looking at charts. Here's another similar setup. Look what happens on the long side. I want to let's go to the NQ, because this is about you, not about me. Let's see. Let's blow this up. And let's look at the NQ. That's the NASDAQ. Okay. Is there a time frame that you'd like me to look at? Who asked for the NQ? 301202. Interesting. Your charts are exactly like mine. Great. A man of great talent with the RSI at the bottom. Yeah, you can either have the RSI or the MACD, but I think they're duplicate. The 5 minute. Boy, I'm telling you, I'm zoomed in on this crowd 901. Is that were you on that TV show 94210 or something, and you can't get it, you haven't retired? All right, here is the 5 minute chart. All right, and I'm really glad that you've asked for this, because there was a lot of money left on the table not using the system. Now, I don't, when I give you ideas of triggers, and I give you some ideas of where to take money and where not to, don't go out there and do it, because there's a lot of stuff that I'm leaving out, because a trigger is a trigger in most cases, but not in all cases. And I'm guarantee you that if you start using these things, it'll be mostly in the wrong cases. But let me show you. I'm going to take out this line right here, because this is a kind of a defensive line that we use. But I'm not going to. I'm removing it because for this educational purpose, it's not important. I can't discuss everything about it because we don't have the time. But I do want to show you a few things. You see this symbol right here? You see this? This is what we call the loaded gun signal. This is one of the signals in the loaded gun, and it looks like a pistol, a hand revolver facing higher. The barrel is moving higher, and this one is, this one is moving lower. Although this is not a signal. What I'm looking at here is hesitation. See this doji here? This almost a doji. It's a spinner or a doji. Spinner being a very small body. All I care about is the body in most of the cases when I'm trading. The Japanese cared about the body and cared very little about the tails, unless in certain formations like the hanging man and so on, and the shooting star. But in general, you want to be more directed from the bodies. When you have a small body like this, or like this, doji or a spinner. There's a lot of small bodies here, incidentally. Followed by a movement higher, a strong movement higher through, I believe this is the 8-bar exponential moving average. That's what this is here. Now we use different ones, but for this example, I want to show you the 8 is a really good one, okay? If you have hesitation and then a strong move through the 8-bar exponential moving average, this is a signal to buy. I especially, now I talk a lot to traders about when to have larger positionings, when not to have larger positionings, when to, what is called position sizing. In this particular case, if I was going to put on, if I had a position sizing range for the day of 2 positions, I never put on less than 2 positions, 2 positions to 6 positions. This would probably be a 3. 2 or a 3. I'm very, very cautious about putting on any more than unless it's stellar. We may bump into one of those. But here is what we've done is we've moved from no decision, indecision. That's what the small body or doji means. And then a movement strong through this 8-bar exponential moving average. This is a buy right here. Okay. And you put your stop below whichever is the lowest. And in this case, you do include the wick here, but this is the lower of the 2 in the formation. It's a 2-bar formation. And I'm putting I like to put it a tick under. I don't, some like to put more, whatever you do it consistently, because you don't want to switch around. It's like hitting a 16 against the dealer's 10. You either do it all the time or you don't do it all the time. Okay. So I like to put it underneath, but suffice it to say, put your stop underneath the formation. Then when the market starts higher, you always want to, always want to, I'm sitting here teaching my process. I guess I'm not sure you want to hear that, but let's just say that the first thing that I like to do is take a quick profit on the first one. And I won't go into how to measure that, but I would have been taking it right here because there's a lot of charts we need to look at. But I take a quick measure on take the quick profit, because listen, if you have a signal, a good trading signal, a good entrance signal is reliable, okay, it's frequent, and it gives you a pop upon entrance the majority of the time. And this is a 60-65% popper. And so it popped nicely here, and therefore I would have taken a quick profit and let the other one run. There used to be a show on TV, and maybe somebody can remember this, where they answered a question and the next panelist got to answer another question, and they kept building money until somebody said, bank it. And then they bank the money, and then the next question would start a new run. Does anybody remember that show? Anybody remember what that show is? Anybody wish I could give you a prize, but I always wondered why they don't let the money run. They don't trust the next person answering the question correctly. But in trading, one of the biggest problems that traders have, and one of the biggest losing situations, did somebody just give me the answer to that? Was it weakest link? I don't think it's weakest. Is it the weakest link? Maybe it is weakest link. Yes. I guess I'm the weakest link today, but yes, weakest link. Thank you. I say, let it run, but they don't. And that's the dilemma for traders. When you get in a position, and you didn't know it was going to do this, and you didn't, see right here, here's another of the same signal. Look at this. Right here, small body, okay, spinner. You don't want it much bigger than this, okay? This starts to get too big. I want indecision followed by a movement through the 8. And with your stop down here, look at this trade. Look at this winner. And you don't get it all the time. We'll go through some charts, but this is one of the simple triggers that I like, and I've got a number of them, but I just want to finish my thought about the weakest link. When you take on a single position, you get the low hanging fruit, you get the nice big movement. When you were here thinking about how far is this going to go, you look back here and you say, oh my gosh, there's probably some resistance here at this level. Maybe I should take the profit. But you say, boy, I got a winner. Maybe this thing is going to run. That dilemma is the bane of a lot of traders. So I say, never take less than 2 positions. Never take less than 2. If you have to go micros, okay? in the NASDAQ, go the small positions, take 4 and treat them as 2 and 2, whatever it is to accommodate the maximum risk that you need to take, which is another discussion. But so you take and treat the first one as a scalp with a particular measure. Again, I can teach you what the good measures are to do that, and then let the other one run until you exit it through your exit strategy. Okay, in that way, you're never going to be in a position where you didn't take the low-hanging fruit. And when you take the low-hanging fruit, incidentally, I like to move the stop on the other one to break even. Okay, so this way I lock in the profit on the whole trade. Okay, I don't want it to come down. And I mean, if it's taken off and you take a profit, let's move the stop to break even. I like to do that. There's a couple of other alternatives, but I'll just say that for this exercise here. So there we go. And so you're going to leave the other one for what I call lewd and lascivious profit. And in this particular case, you would have been in it. You wouldn't have. The fact that it crossed here is not enough for an exit on my exit strategy. But again, I won't go through the exit strategy today. I just want to get you started and get your beak wet on maybe joining me and passing the prop trading so that you can start putting money in your pocket like I've shown you is possible. Okay, so here is what's going on. I take 2 here, I take the short profit here and I let the other one run. I've moved my stop to break even, so I'm relaxed. Okay, and then the market starts to go sideways. Well, we have a count we use for the markets, different counts. We would have been out right here. Okay, we would have been out right here in this area. Okay, and because when a market goes sideways, you start to waste time. One of the things traders don't realize is that time is a big factor. If you're sitting there waiting for a trade and you don't have a reliable frequent trigger, you're going to do what Valerie says at the other side before me. She mentioned the fact that traders don't like waiting around, and we don't like waiting around. So you really want a trigger that can make that can get you in, a valued trigger. Okay, one that you've tested and makes sense. And if you don't get the trigger here, if you didn't get it here, sometimes you can create a trigger for yourself by using a different time frame. Another lesson. But okay, so this one would have been out here. So we had a nice short profit, and then we had a nice one here. And then right here, I'm looking for another. And this is not, small body, not a big enough body. Okay, but let's take a look at the current. You'd still be in this trade. Whoever asked this, you got to stay long this, right? I mean, you have to stay long this trade until such time as you exit it for a with your whatever you must have. You have to have a very tight exit process. Okay, and in this particular case, we're not near any of my exit processes. Yes, we have a turnaround in the. This is something interesting. Okay, if you're trading this now, 31240, whatever your name is, I wanted to I want you to notice something. I use this RSI for one particular purpose. I mean, we're overvalued here, so we want to look for a short trade, but we want to get in it at the right time. Okay, this is a peak in the RSI. If you look here, let's look at if I just draw a vertical line, this peak is in this area. Okay, this peak of the RSI was made here. Well, here we have another peak, but when you have a higher price, and you all probably know this, when the price is higher, but the RSI measure is lower than the previous peak, you've got a market that's susceptible to correcting. Okay, but you're not just going to do it. Now, for you experienced traders here, an engulfing pattern like this is usually a pretty good sense that you're going to be right about looking for. It's not a time to act for most traders because this is too strong, and we're still above what I consider one of the golden averages in this particular example. So what I would be looking for is this. Well, maybe we can go back later and see what happened, but I would look for this. See, now we have a doji. We have our doji. What I'd like to see is this candle move lower through that 8-bar exponential moving average. That would be a short, and then putting your stop up here. May or may not happen, but that would be on my wish list here. So 90210, did I answer your question okay? Divergence, yes, called divergence. Is there yes, if you email me, would you put up my email address, nhallett@thedisciplinedtrader.com? David, if you would, for Lou, I have hi Lou, I have the discount code for 80% off right now. So instead of paying for $150,000 account, instead of paying $300 a month while you qualify, you're going to pay $60. So, and if you're going to test for a 50, instead of paying $160 a month as you're testing, and it shouldn't take you more than a month or two, especially with the 50. And then it's going to be $30 a month. So I'll give you that code. It's too long to write here. It's a gigantic code, but they give it to me because they know I love them. Okay, and I can give it to you if you want to. Just if you put my email address in the chat. Can I put it in there? Let's see. Anybody that has a question about anything I talk about, yeah, there it is. I think you're seeing it. No, that's just hosts and panelists, or whatever. But if you would put that, David, in that, I appreciate that. But that's how to email me. I'll get you the link. Anyway, look at that. That's beautiful. Did I answer your question? 81210. Is that good for you? Is it as good for you as it's good for me? And somebody, if you want to give me another chart to take a look at, we can do that. I think I've answered all the questions so far. Okay. Otherwise, I will just go to the Japanese yen and show you how I made that money today. That $600 it took about an hour. I'm a beginner, and I learned this I learned this Apex. Yes, email me, and I'll give you some guidance, some videos to look at, and so on. Not a problem. But yeah, I mean, I think it's the best way to learn. In fact, I will mail you a white paper that I just wrote recently called "The Death of Simulated Trading." If you're a beginner, I think you should start by qualifying for some of these accounts instead of simulated trade. Once you've tested your trading plan and you've back tested it, instead of forward testing it, I'd rather you forward test through qualifying. Why do it for nothing? Why not qualify for this, especially with these discounted prices? Anyway, I'll explain it more to you if you want. Joyce, just email me. Were you able to see my email address, Joyce? How do you find your exits? It's nhallett@thedisciplinedtrader.com. NHALLETT, NHALLETT @thedisciplinedtrader.com. And you know, David will get it for you. I think. Let me see if let me see. This should do it. I'm sorry to interrupt this. I'm not that sorry. Can you say, you've got it now? Are we good there, Joyce? Whoops, I put an extra T in there. Extra T, let's do it right. I was excited about my own last name. I'll help you as much as I can. Okay, somebody asked for how do I find your entries and exits? You find my exit through there. I'm going to type it in here. Their money, yourprofit.com. Okay, their money, yourprofit.com. That's the exact system I use. Says everything. Okay, if you care to purchase it under the guarantee that I have, and you won't believe the guarantee that I give you. Okay, because I know it works. Okay, so but the risk is mine. All right, let's see if I'm seeing any other. Anybody want to suggest a chart to take a look at? Otherwise, I think I'll just reduce this. We're not seeing what I want as far as a signal here. Let's do something interesting in the NASDAQ. I want to show you something while I got you. I want to move the time frame because I'd like to try to get short here if I can responsibly. Okay, let me go to a 2-minute chart. I don't go any lower than 2 minutes. You see, and sometimes you'll get a quicker signal on the 2-minute. The crazy part is you had the same buy signal on the 2-minute, and you would have been in it all the way until here. You know, it's crazy. All right, so I'm talking to myself. All right, let's get back to the 5-minute, but I just want to show you that moving time frames can sometimes expose that trigger. Okay, somebody wants Earl. As I walk through this world, nothing can stop. Anybody know what I'm singing? What can I stop? And you are my girl, and no one can hurt you. Oh no. Anybody know that song? Yes, sir. Oh, I do love you. Duke of Oil, Duke of Earl. You remember that Duke of Earl? Oh, 91210. Same person. Okay. Here is the 5-minute chart on the Earl. And you can see right here, I don't see much in the way of trades. This is a trade that I probably would not have taken. I'm going to get rid of what we have. This is a very important line, but I can't get into it today. It really helps you to stay out of trades that you wouldn't be in. My dad was a huge doo-wop fan. All right. Just call me Papa. Okay. Here is, this is too big. Again, I like to see a very small body and then the movement. Too big. It did go sideways and would have been a profitable trade, but you know, that's neither here nor there. This one really, see this right here? This would have been a signal for me, okay? Small body on one side of the 8-bar exponential moving average. You want the small body on one side and then the pound through. The fact that it's such a small risk, well, again, I've had to measure it and so on. This is the crude oil. I would have probably taken half contracts. There's a half contract on crude that's a terrific high volume contract that you may want to consider trading. And you would have been in for this movement right here. But right here, if I'm looking at the 5-minute, there's not much to say on this except for the thing looks lower. Although, you know, it looks like it wants to form a head and shoulders bottom. It tried here and failed. This could wind up being a triple bottom. There's a lot of crap going on here, but there's really nothing to do. We're too close to a lot of support levels. Whenever you have these kinds of markets stopping at a particular price and then looks like a particular formation, this is a support level in here. Here's another support level in here. And we may test those support levels. Looks like we're trying to do that as I'm talking. But the idea here is, you know, there's really nothing here. Here is a signal on the short side of what I talked about before. You would have taken a short profit right in here, and then you would have hung out trying to get more out of it until you were probably broke even here. But here's a reversal signal, right? You would have gotten your, this is the reason why you want to do both. You want to give yourself a chance to be into something like this, but you also want to take the small money if it gives it to you. This way you don't have that dilemma in your mind. And I teach a lot of these kinds of concepts because this is a mental construct concept. Traders fail generally not because of their trading plan. They fail because they can't control themselves. They can't follow their trading plan because their mind is very creative. We as humans, we create all kinds of, and think of the stories that you've created about the market that were just fictitious. So here's a perfect example of this particular trigger. It's not used all the time, not in all cases, but in this case it is. You have a doji where the open and close are the same. What this means to me is that you have the same, there's no, in a 5-minute period, they didn't know whether to go long or short. Well, the decision was made through the 8-bar exponential moving average. You're buying 2 here, putting your stop down here, and you would have taken your scalp right in here with our measure, and then then you would have moved the second to break even, and you would have broken even on the second half of the trade. Now, I want to emphasize the fact that you wouldn't have taken a big position here because you've got to respect supports and resistances. The dream of support and resistance is, hey, if we break through this support, this particular resistance here, this thing could really fly. And you're right, but the vast majority of the time, you're either going to get tested out of it like this, makes you think it's going to run, and then boom, it kills you. Okay, because you're looking at these 2 tops and you're saying, gosh, if this breaks, look at all the people that got long here. These are inexperienced traders that are not respecting this obvious resistance area. Okay, the market loves to have you think it's busted through and then comes back and it just takes you out. So and then you start making yourself right in here. Well, it's going sideways. Maybe it'll come back. and you're trying to make yourself right, and all you do is make yourself much wronger. So I'm saying to you that that there are times to take these signals and times not, and take, again, position sizing is so important. Position sizing is so important. So this would have been a minimum position size because of those reasons. Sir, normally the input for the EMA is the close. Can we use high and downtrend? Can we use high in downtrend and low in uptrend? I only, I'm glad you said that, because I only operate on the close. You saw me take a profit on a position when we started. I always go to the market. I always go to the market, because I can't tell you how many times I've tried to squeeze out in the early days of my trading that extra, it's going to come back and give me that extra tick. No, and it just starts to fade away, and you start feeling like an idiot. So if it's time to go, go. Okay. So and the same thing with entry signals. When this was forming, when I see this, a doji followed by another 2 indecision candles, I'm hoping, I'm praying for that candle to the next candle to be bust through, and it did it for me. Okay, so while this candle is forming, I've got my finger on the buy button. In fact, sometimes I have it depressed, because when you lift your finger off the button, that's when it interacts. So as soon as the first trade happens on the next candle, my finger goes up. Okay. And when you're looking at charts, you'll see all the charts kind of move to the left a little bit. My finger goes up and buys the next one at the market. So that's the way I do it. That's the way you should do it, I think, because I think everybody should be using loaded gun. Look, there's a lot. I didn't, when I make a presentation, the first thing I talk about is the fact that I spent the first 15 years of my career writing trading plans for people. Okay, I know trading plans, and one of my books is still on Amazon. But I just want to say that there are many, many good trading plans out there. And that's why I've made a focus over the last 20 years of helping traders with the mental and emotional piece, which traders don't want to hear. But then I saw prop trading. And so for the last almost year now, I've been focusing on both, because you need to be disciplined in prop trading. And the loaded gun system that I talked about with, if you go to theirmoneyyourprofit.com, it encompasses the emotional processes in the trading plan, just like I showed you here, because that dilemma of, should I leave it and let it go, or should I take the profit? That was one. So always go multiple, and always treat one as one and one as the other. You will be surprised how that simple tip, and I got about 10 of them, that will not only keep you calm, that you're not missing anything, and you're not at the point of indecision in your trading. You should be decisive, decisive, decisive. Just like I took that profit. People would say, well, why'd you take the profit if the market is going in your direction? And it was. The reason is, I'm doing a webinar now. I'm doing a webinar here, and I don't want to look at it. And there's plenty of opportunities. Just take the profit and go. There's no bad time almost to take a profit. Okay, so when you're doing something else, get out of the market. Okay. Okay, I'm giving you a lot of stuff. All right. Anybody have any? Let's look at crude in the long term, because I think if you're trading any market, if you're in the if you're trading the stock complex in the crude oil market, you got to take a look at what's going on. Most traders, most experts will tell you to. I don't exactly know why I drew. It's probably for a different time frame, these lines. Most experts will tell you that this market is probably move a little bit higher. At least Elliott Wave. I watched a friend of mine, and of course, if you know Jody Samuels, you need to check her out for Elliott Wave. But look at here. I'm right here. I'm bullish on the crude oil. Okay. Now that may not help me in a 5-minute chart trade. Okay. What it may do is help me with my position sizing. Again, I'm always looking to have the right position at the right time, and you should too. Look at these. Look at this signal right here. Small body, movement through the 8. Look at this follow through. Small body, movement through the 8. Look at this follow through. Small body, movement at the 8. I mean, aren't you glad you showed up today? I mean, not just because of me, but because there's a lot of speakers have a lot of good stuff to show you. But I'm saying to you that, and this is a particular case this is an example that's important. Any system that I've ever run or I've ever created is most accurate in the longer time frames. Okay, and I'm showing it to you here. Another possible, this may have been a take. There's a certain size I like this to be compared to the body. I can't get into what that is in different situations, but look at this, another winner, another scalp winner. There's no other trades here, but look at these big movements here, you know. And right here we have another one. Okay, I have and we could be wrong here. I have my stop down here. This is when I'm describing to you in this particular trigger is probably it is a 61, 62%, depending on. I've had as high as 67% in a 1 week look back at this. But I only look at the 5 and the 2 and the 10. But I've never really looked at the numbers in the daily because I don't trade the daily on this. But look at this. Here's a signal to go long in what I've been talking to you about. Now, it's not moving in the right direction, okay, but that's okay. This is the daily chart. Anything can happen. And we have our stop down here, but you got to measure. So, and what am I in this? I'm bullish for a couple of reasons. Here's another reason. There's 2 other reasons. Gigantic tail, okay, hanging man. This guy's dead right here. He's gone. And it was proof the next movement is higher. And it really worked out well. I will say I think you've probably heard of Steve Nissen out there. Steve is a friend of mine. I did a webinar about a decade ago, not a webinar, but a live thing over at Trump Tower in Miami Beach. And I had all these speakers that I invited to speak with me. And Steve was one of them. And one of the things that he's a candlestick expert. One of the things he said that I thought was pretty interesting is that when you see a hanging man or a shooting star, there isn't one here, but many times I think he used 70%, but I don't quote me. Many times it will retrace into that scale 50%. Okay, now I don't see it doing here, but don't assume that it goes straight up. Well, you certainly can assume it in some of the things I'm seeing here, but. Anyway, we've got to. This is one of the reasons This is one of the reasons why this particular symbol would probably get. If I had 6 positions I could be taking, this would be a 3 or a 4. It wouldn't be minimum. And the reason is because this is a downtrend. Look, we're fighting a downtrend. Here's an early resistance right here. So you don't want to get too crazy. You don't want to start your dreaming too soon. Okay, this is a downtrend, and most likely it's not going very far. Although we do see some, maybe see how it's going, ebbs and flow. Maybe this is going to be a bigger ebbs and flow. And most chartists will tell you if it breaks out of this thing right here, and these lower highs right here, these are minor resistances here. You draw your lines, you know, and they would tell you it's probably going to test, may look like it's going to test this 84 level. I don't agree with that here right now, but for several reasons that we can discuss if you're a client of mine. But the idea here is we've got to trade here on the long side, and I'm taking it. Maybe it's only a 2, okay? But I like it because we've got this tail here, especially against a previous bottom. Not only is it a tail like this, a hanging man, but but there's another similar hanging man. Got a big head for hanging man, but it also tested a bottom. 2 big, huge, and not only that, but this right here, this RSI, this area right here, even though the price is higher than this eventual, even though the price is lower here than here, the RSI is higher. So you got your nice move here. I think there's a lot of reasons to believe that we may be going higher after this noise is done. Who knows? But I would be buying here and putting my stop underneath here. Now, one other thing I want to talk about, when you're this close, now there's a daily chart, so this distance could mean something substantial in numbers, but if it's, so maybe you take on a smaller position in order to have your stop down here. Always look to go smaller, not larger. Trade big, I'm sorry, think big, trade small. Think consistency, trade small, okay? So that's my thinking on the crude in the long term. A lot of reasons to believe we may be seeing a rally here. Okay, what's the process when you trade? What's the process when I trade? I'm giving you some of the entry processes. I use the trading plan that I built about 2.5 years ago called Loaded Gun. You can find it on theirmoneyyourprofit.com. There's a special going on right now. If you want to take a look for it's Friday, it's tomorrow, but it's either ending tonight or tomorrow. But take a look at the half price pricing on it. If you want to get in, take a look at the guarantee. The risk is on me. That's the process. But this is all about where I think markets are going, and I think I'm going to have to really accelerate and look at some markets and kind of give you some Anybody have a market that? Yeah, he created a great book on candlesticks. Yeah, one of the best. Okay, which chart are you looking at now? I'm looking at the crude market. Okay. Any other at the beginners? I would suggest study to become a profitable. Yes, yeah. Email me. I'll give you some guidance. That's free. Okay, I just want to help you. Okay, you can. Yeah, if you email me, you can. I'll get you the recording, and David will post it also. So normally the input to the EMA is the close. Yeah, I think I've answered that. All right, give me another symbol. Otherwise, I'm going straight to the Japanese yen. Too late. Japanese yen. All right, look at this. Here, this is actually, I got into this trade originally in, let's see, where was the trade? Oh, this is the daily chart. Okay, I was looking at the 5-minute, but look at the Japanese yen. Here is that symbol I talked about. Now here's one that was a losing, okay? Small body, move higher. Now, there's a couple of reasons to keep this entry to the long side, if you were going to the long side, minimal, because you've got a huge resistance up here. And again, any trader with their salt is going to give extra attention to support and resistance. Valerie does, before I heard her for 10 minutes. Valerie, who's an excellent trader, does the same thing. We all do. Respect the support. Yes, we have resistances up here on the way down, or support on the way down. In any event, if I'm going long, this is going to be a major resistance. But you could go long. It's a signal, and you would have taken a loss. So got to keep the losses in check. Here's another signal right here on the short side. Love it much better. We're taking out a lot of lows here, where we just tested this top feebly. We're going through the 8 like I like it in this particular case, and we got a small body followed by a. Now, the only problem with this trade is the risk. You got to have your risk up here, okay? And so to do that, you may want to go micros, or in this particular case, in the Japanese yen, there are small contracts in the Japanese yen. But what I love about the Japanese yen is even the small contract, even the full contract is only $125 per penny. Okay, so this right here is going to be about $220 on a single position. So if you do have to take a single position, make it the scalp, not the runner. Okay, make it the scalp, not the runner. Always do what's best for you. Don't buy into your dream. Buy into reality. Okay, the reality is if you can't take on 2 positions because the risk is too big, take 1 position and make it the scalp. Remember I said always take 2 positions? Well, sometimes I will take 1 position if it's a big, but it's always a scalp. Okay, there's exceptions to every rule, but you got to, and what it is another rule. In case, because of the environment. So look at this. You would have had this. Oh, not only would you got your scalp right in here, because the bigger the body, the greater the scalp potential. You would have until you reversed it right here. Now this is just holding its nose over the moving average on the close. Good enough. Good enough. Take it. Relatively small loss, especially compared. But look at the payoff. Scalp and another one. Okay. Here's a losing trade, okay? And this probably would have been a nice trade to take 3 or 4 positions on because it's a small risk. Would have lost. All right, so I lost. Shoot me. Okay, here's another losing position, okay? Followed by a winner that's still running, okay? So this is daily. This is the daily chart. Let's look at the 5-minute, which is where this is where I traded today. And here's the move that I took advantage of. Now, I didn't get in. I can't tell you. There's a different trigger that I use. But the point is that I wanted to get short because of this. Okay, this is when that news came out. I guess it was a housing news. Really didn't see exactly what it was. I try not to look at reports. I know when they are, so I stay out of the market. I don't trade during. It's too risky, okay, to trade. But I knew the market looked like it was heading lower. One thing I want to tell you about, I think it's the compass. which chart am I looking at? I'm looking at the Japanese yen, okay? And if you use the Japanese yen against the dollar in a Forex chart, this works in Forex. It works in Bitcoin trading. It works, but I use it in futures trading. That's what I built it for. And I built Loaded Gun. Literally, I've adjusted it now to pass the prop trading. So if you're looking to trade somebody else's money, this is the system for you. But I want to show you something. This is an old rule. You got to dust this rule off. This is a rule I learned 40 years ago, 4-0. And it's helped me ever since. When you see an accumulation like this, take out your protractor. Is it the protractor? Take out the compass. I'm sorry. Take out your compass. I know you have one. You remember what a compass is? It's got the pencil on one end and the pin on the other. Okay. Put the pin over here. Okay. At the end of the, because what's happening is you're seeing this move down. How far is it going to go? I'm going to tell you how far it's going to go. More than likely. Put your compass, put your pin here on the compass, and then spread that compass out and put the pencil at the beginning of the accumulation over here. And then swing the pencil down, draw your arc. It's going to be somewhere in here. So as far as I'm concerned, this down move is not done yet, because when you see an accumulation like this, what you're seeing is interest accumulating on both sides of the market. What does that mean? It means you got a lot of longs, you got a lot of shorts. And what does it mean when this happens? It means the longs are getting killed, okay? But and because of that, but some of the longs are going to stay in. The longs are getting killed, and as it went longer and short, hurt, more and more hurt. And then you have other people. Well, it's got to come back, got to snap back. Well, it didn't. So you had more people hurt here. Then you got a sideways action, okay? So people are saying, okay, we could be heading right back toward the accumulation to test it. And eventually we may, but here you have a long signal, okay, to go long in the Loaded Gun system, one of the signals that we use. So here we have Loaded Gun. Maybe you would have taken it, maybe you wouldn't have. I can't describe, there are reasons you wouldn't have taken it here, but I want to get into the main point here. And that is, I'm looking for a lot of downside here based on this accumulation, because I put my pin here and my pencil here, and I spun it down, and I get an idea. After this is all over, look later and see if this doesn't come very close to where that target would be. But here is where I got it in on that $600 trade. I put on 3. Now, this is not the signal we talked about before. This is a different kind of signal. I won't go in, but I will say, just trust me. Here's where I got in, and I took it all the way down to here, 3 positions, and that was enough for a couple of cents and $600. I just want to show you there's a lot of potential when you trade properly, and there's no reason why you can't get funded and trade somebody else's money. The problem with trading your own money, when you have less than 50,000, especially if you're doing 5 or 10,000, and you say, okay, I'll do micro contracts. It doesn't matter. That small amount of money means that you're living small, and there's nothing wrong with that. Everybody that wants to live big started off living small. But the way you do this, the way you trade to make that happen, is that you gotta think big, but trade small and responsibly, and so to do that, you've got to have a frequent, reliable trigger. And I've got a few of them. I showed you one of them, but please don't start using it, because there's times that you wouldn't use it. For instance, I wouldn't have been in on this one. I would not have been in on this one, and there are reasons for it. I can't. This is not this is where do I think the market's going session. So here you're seeing, you see here, I would have been out. I would have had my scalp already, and I may have been stopped out of here already on the second position. So, but right here on the 5-minute, I'd rather be long than short, but this doesn't look like it has a lot of potential, because again, I think the market's going down based on the measure I gave you before. Okay, let's look at something else. Let's look at maybe one of the markets. Oh, gold. This is a market that I did very well in today. Actually, it's one of the few positions I held by prop trading, I held overnight. Now, you can't hold positions overnight in prop trading, but you can get out at the required 5 p.m. Eastern time and get right back in at 6 p.m. Eastern time. And that's what I did. Let's take a look at the long-term gold chart. Okay, this is the daily chart in gold. You see this right here? This is why, this is why I originally got short. This is the day chart. But look, here's that symbol I'm talking about. Okay, not only, but look at the RSI. The RSI here. This is a highest price. Okay, well, our RSI doesn't. It's not our highest price, highest RSI. Lower price, lower RSI, which is information. It's not extra. So I'm not adding anything because of RSI to my position sizing. But here is the signal that I took. Okay, and look at this. I'll show you later if we have time. It's still in my account there. I took a $2,000 profit here on a qualifying account. That one's not in my pocket. I'm also qualifying for a $250,000 account, and I got to make 15,000, and I should do that very shortly. But this was a nice trade for that. Here's another trade on the daily where you would have had your scalp and then gotten stopped out. Here's a losing trade. Now, would you take this trade against this? Probably wouldn't. Okay, one of the things you look for. But look at this. Small body. Boom. Look at that. The dailies works really nicely on. Okay. So what am I here? I'd be short. Okay, and I continue to be short. Look what happened yesterday. This is yesterday's action. We broke the body lows. Again, remember, I'm giving more credence to bodies than I am to wicks, or what do they call them, wicks or strings, and the fact that this is a very short. I mean, not only are we short from here, but this continues to be short. I never add to positions, incidentally. I never add to positions ever, either if I'm losing and trying to average down, or averaging up, which always ruins your break even. But listen, and here's the lesson. This is why I'm so adamant on talking about, I'm talking about getting into the proper amount of positions, your position sizing when you get in, because that's the best time to do. If you've got a strong signal that you know works, and it's surrounded by reasons to take a maximum position, take it, because you've done your homework. Okay, rather than seeing something and then getting into the dream and adding to it. Okay, so I'd be selling. I think we're likely to move down here. We've taken out most of these. If we close in this area, I'd be looking for a move to at least test this. Is this 1900 or 1860, 1840? Here's 9. We just 1900 is in here. I think we breached that. But again, whole numbers. You notice right here we have a gap in that 1900. Whole numbers can be an issue. It's just because people have a mentality for whole numbers. So if I had put on 5 positions here on the short side, I would be taking my first 2 right here. I would have been taking my second one at this resistance. So I would have had two positions left. I would probably take my third one or my fourth one out at 1900 because I'm anticipating that whole number, and then I'd leave the other one for another means of exiting. Okay, so double top is another qualifier. Yes, it is. But again, it's a qualifier from the standpoint of position sizing, not whether you get in or out of the contract. Okay, let's see. We have room for probably one more here. Again, if you want to use the same trading system I have it on special right now. It's their money. I'm typing it in. yourprofit.com, and if you have any questions, write me at Hallett at the Discipline. So glad I use the Discipline Trader as a URL because it's so easy to spell. I'm sure you agree with me. Okay, their money, yourprofit.com. That's for the trading plan, and that we'll have a special on. And then if you want to ask me any questions, email me. Okay, I'll take one more chart. I hope you've enjoyed this. I've tried to be fast paced. Any other? Anybody want to look at the chart, or should I name another one for you? I guess I'm naming another one for you. I've looked at gold, I've looked at crude, we haven't looked at the ES. Oh, I haven't looked at the euro dollar. I told you I like the Japanese yen, I like the euro dollar also, but let's look at the S&P. You can see we're in Chop City here on the daily basis, so there's really nothing much to do. But I will say that there's a big move coming. Why is that? Why do I say that? Why do I belt that out to you? Because I'm looking at this accumulation. Again, dust off this rule that when you see a sideways movement like this, look at all these people that are convinced that it's going short, and look at all these people convinced it's going long. And that's why it's going nowhere. okay? When it starts to break, and this could be a break to the upside coming, we don't know yet. You have to wait for the close on these things. Take your protract, take your compass, I'm sorry. I'm an engineer and I can't remember the protract. Put your pin here, put your pencil here at the beginning of the accumulation, and then swing it up, and somewhere up there above my screen is going to be a target that I would expect this move to happen if it actually does start happening. So there is, that's my thinking is here is nothing yet until we break this. I would like to see whatever high is here. If I'd like to see the market end lower and then break through whatever high is established here to be going long. I don't want to get caught in something like this where you have an accumulation, the market breaks to the high and then it falls down. Or here, you have an accumulation in the markets and then snaps back up. This is a wet dream right here. Did I say the wrong thing? Am I ever going to be invited back? I'm just saying this is, you're dreaming here, okay? Nothing's happening here. Yeah, you have this, but it's really, it's too big a risk. Look at these risks that you're taking when you're still without any confirmation, okay? But let's look at the smaller time frame, which is where you're probably going to make your decision on, because these are more general decisions. Here is, this is not a signal, okay? Can anybody tell me why this is not a signal and what I've been explaining? Can anybody tell me what that is? Why that's not a signal? And then we'll kind of wrap it up. It's not a signal because I like to see the body on one side and I like to see this on the other side. Okay. Now, look what's happening here. I mean, we're setting up here for a short trade, and let's see what's happening. We have a higher. We're looking at a really exceptional divergence here. We have the RSI up here at the 80 level with the price here. We got a higher price. In a normal market, we'd be looking for a higher RSI. We do not have that. And then we have an even higher price and an even lower RSI. This market is going to tend to go lower, and this is what I've been looking for. So here we have a candle that's about to form. We've still got 3 minutes left, so this could go anywhere. I would love to see it close around here. I would take a minor position, maybe 2 positions if you were trading micros, and a very small account, 2 micros. Trade it short, put your stop up here at new highs, and then watch this market go. I would look at the size of this body, and I would look for a similar movement to take my. I'm not being too exact here, because there is an exact measure, but I don't want to get into it now. But if it's a long body, look for more on the scalp side. And generally, I look at this. Here's a former resistance on the way up, which becomes a support on the way down. So this would be an area I may look to take my scalp, okay? Because that's going to be an area of resistance, okay? And then I would move my stop to break even and move low. Let's see what happens here, because the RSI is telling us, whoops, we may be going lower here. So let's see what happens. You'll see it without me. Because I am leaving town here and getting ready for our next guest. So any other final questions for Mr. Hallett? Or that was crazy. Why do you choose what you trade than other? Because I'm looking for movement. I'm looking for markets that I've tested. I don't do anything unless I've tested it thoroughly, okay? And I don't want you to do anything. I can do the testing for you. Then I'm going to ask you to test it the same way I tested it. I want you to believe in it, not because I'm telling you. I want it because you're telling yourself, okay? All right, so look at this. We're starting to get, you can ask the next trader whether they would be going short on the ES, but at least for the day. Again, remember that the long-term chart had a tendency to go long, so this may be fairly limited in its downside. Okay, I think I'm going to stop sharing my screen now. And I'm going to allow David to bring on our next fabulous guest.